How to invest in KLSE Stock Market with small capital only 5,000 ringgit or less. You may scoff at the idea of getting into investments with just 5,000 ringgit or less. You might think, what can I do with that meager amount? A lot, actually. You'll be surprised at how much you can gain in years to come if you invest that money right now. The KLSE, the stock market index that tracks the 30 largest Malaysian companies, has an of minus 3.4% over the past 3 years. You don't need to invest hundreds of thousands up front to see a healthy return. Here's a guide to where you can put your 5,000 ringgit and see it grow. Today we will discuss about 4 kinds of investments and its pros and cons. Hey everyone, how are you doing today? Before we proceed with the video, please don't forget to subscribe to our YouTube channel for exciting content. 1. Stock market. Stock markets are venues where buyers and sellers meet to exchange equity shares of public corporations. Owning stocks in different companies can help you build your savings, protect your money from inflation and taxes, and maximize income from your investments. It's important to know that there are risks when investing in the stock market. Investing in the stock market is not gambling. Equating the stock market to gambling is a myth that is simply not true. Both involve risk, and each looks to maximize profit, but investing is not gambling. Benefits of stock market. Through capital growth. Selling a share for more than you paid for it is known as capital gain. Through dividends. Dividend is a cash reward given out to shareholders as part of the profit made by the company at the end of each financial year. Disadvantages to owning stocks. You could lose your entire investment. If a company does poorly, investors will sell, sending the stock price plummeting. When you sell, you will lose your initial investment. However, if you are willing to spend in stock market and learn with us, this quite be a good investment for long-term and short-term, and it also give you special gains. 2. Unit trust. Unit trusts are a type of mutual fund that can hold assets, with profits that can be given directly to investors instead of being reinvested. Like other mutual funds, it pools together money from various investors to invest in assets like bonds and equities. A unit trust pools investors' money into a single fund, which is managed by a fund manager. The fund is then split into units, which is what you buy when you invest in a unit fund. Unit trusts are one of the most popular forms of investment funds. Although these leads to a high management fee and high service charges compared to ETF. But the fund manager actively manage the funds. This means that the fund manager actively select and pick the right securities to maximize the returns of fund. Theoretically, it will be able to minimize the loss and maximize the gain even when the market is volatile. This essentially means that you are investing in the team's ability to manage the fund for you. Now you know why you are paying the management fee for. Benefits of investing in a unit trust. Simple and transparent. You do not need to have a lot of time, knowledge or expertise to start investing in a unit trust. High liquidity. Low initial investment amount and professional fund management team. For those investing a relatively small amount, the ability to tap on the expertise of a team of professional portfolio managers can be an advantage they may not be able to afford otherwise. Downsides of unit trust. However, the downside is if a fund is not well managed, you may get less return or even negative returns. Not good for people who want to invest for a short period. Currency risk. Investment into unit trust funds that have exposure to foreign investments may be exposed to currency risk. High expense ratios and sales charges. If you're not paying attention to unit fund expense ratios and sales charges, they can get out of hand. 3. REITs. A real estate investment trust is a company that owns, and in most cases operates, income-producing real estate. REITs own many types of commercial real estate, including office and apartment buildings, warehouses, hospitals, shopping centers, hotels and commercial forests. Some REITs engage in financing real estate. Basically, it buys property by the public money. Manage the property and make money from it. Benefits of investing in REITs. You can participate in the property market with the very low cost. REITs offer investors the benefits of commercial real estate investment along with the of investing in a publicly traded stock. Disadvantages of REITs. Its weak growth. Publicly traded REITs must pay out 90% of their profits immediately to investors in the form of dividends. Yield taxed as regular income and potential for high risk and fees. So how can you start investing in REITs? Basically, REITs is the traders in KLSE Stock Exchange as long as you have facilitate account. You can invest in REITs. 4. ETF. ETF is exchange traded fund. It is the type of investment fund and exchange traded product. They are traded on stock exchanges. Exchange traded funds, ETFs, take the benefits of mutual fund investing to the next level. ETFs can offer lower operating costs than traditional open-end funds, flexible trading, greater transparency, and better tax efficiency in taxable accounts. Benefits of ETF. ETFs offer advantages over stocks in two situations. First, when the return from stocks in the sector has a narrow dispersion around the mean, an ETF might be the best choice. Second, if you are unable to gain an advantage through knowledge of the company, an ETF is your best choice. Disadvantages of ETF. Unlike mutual funds, ETF shares are bought and sold at market price, which may be higher or lower than their NAV, and are not individually redeemed from the fund. ETFs are subject to market fluctuation and the risks of their underlying investments. ETFs are subject to management fees and other expenses. So these are the 4 types of investments that you can start investing today with just 5,000 ringgit or less. Thanks for watching. If you like our video, then hit the like button and don't forget to share and subscribe to our channel for more valuable videos.